Have you ever wondered how economic shifts impact housing starts, particularly in the multifamily sector? Recent reports indicate significant changes in construction trends. Welcome to the Multifamily Real Estate Insights podcast. I am your host, MacKay. Let's get right to it. According to a recent article by Claudia Larson from RIS Media, housing starts in Canada are experiencing some notable shifts, especially between single-family and multifamily sectors. The article highlights that these changes appear to be a reaction to ongoing economic uncertainties caused by factors such as trade wars and inflation. These economic pressures have resulted in a broad decline across leading construction indicators, with significant regional disparities also coming into play. In Ontario, particularly in cities like Hamilton, Niagara, and Kitchener-Waterloo, we're seeing a divergence in the construction trends between single-family and multifamily housing. The multifamily sector seems to be holding its ground better than the single-family sector, which is facing more challenges. This could be attributed to the increasing demand for more affordable housing options, as multifamily units often provide. The ongoing economic conditions, including tariffs and inflation, are influencing developers' decisions and, consequently, the types of housing being built. The source notes that economists believe these shifts are a direct response to these economic challenges. Developers are likely adjusting their strategies to mitigate risk and cater to the changing demand in the market. The multifamily sector's resilience could be a silver lining amidst the broader economic pressures, offering opportunities for investors and developers who are able to adapt to these changes. It is essential for investors and stakeholders in the real estate industry to stay informed about these trends. By understanding the factors driving these changes, we can better position ourselves to take advantage of the opportunities that arise. As always, staying adaptable and informed is key in navigating the ever-evolving real estate landscape. In today's segment, we're diving into a fascinating analysis by Jamie Macon from Business in Vancouver. The focus is on the recent slowdown in commercial real estate investment across Canada. According to Altus Group, investment sales volume has seen a significant decline from $12.3 billion in the first quarter of 2023 to $8.5 billion in the first quarter of 2025. That is a 31% drop. The report highlights that this decline reflects sales primarily of income-producing assets in commercial and multifamily real estate. Robert Santilli, a valuation advisory director with Altus, attributes this contraction to a mismatch between buyer and seller expectations, often referred to as the bid-ask spread. Essentially, what buyers are willing to pay does not align with what sellers expect to receive. Additionally, the rising cost of capital and mortgage debt, following the interest rate hikes in 2022 and 2023, has further complicated the investment landscape for both institutions and private buyers. Interestingly, there is a conversation happening around the fundamental nature of commercial real estate as an asset class. Dror Poleg, author of Rethinking Real Estate, suggests that commercial properties, particularly offices, are transitioning from being bond-like assets to operating businesses. Historically, these assets were backed by long-term leases from large companies, providing a sense of security akin to government bonds. However, the landscape is shifting with shorter leases, increased vacancy rates, and an evolving role for landlords, who now need to offer more amenities and services. On the other hand, some experts, like Andrei Pavlov from Simon Fraser University's Beatty School of Business, maintain that commercial real estate will continue to be a safe haven for investors. Pavlov points out that commercial real estate offers a robust hedge against inflation, making it a safer bet than typical corporate equity investments. He argues that despite the current economic policy uncertainties, commercial real estate should still deliver consistent returns, much like it has through previous volatile periods like the internet boom, the 2008 financial crisis, and the global pandemic. This discussion underscores the importance of staying informed and adaptable in the ever-changing real estate market. While challenges exist, there are always opportunities to be found, particularly for those who are willing to embrace change and innovate. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, MacKay. See you on the next one.